Hi friends, Professor Joe here. I hope you all are doing great. And welcome to this video. In this video, we are going to discuss about MACD or MACD. That's how a lot of people call it. And how you can use MACD to make good profits from the market. And by adding the 200 EMA, how you can maximize your profit ratio. Once you combine these two things, your profit ratio can go up to 60 to 70%. With a risk to reward of minimum 1 is to 2, and it can go up to 1 is to 4, 1 is to 5, maybe 1 is to 6 also. Before I go ahead, friends, if you have still not subscribed to my channel, kindly subscribe to my channel and ring the bell icon. I keep creating a lot of educational videos on trading, stocks, crypto, options, and many related topics. So let us now get back to our topic. MACD, MACD, moving average, convergence, and divergence. This is a very good oscillator. This is normally found at the bottom of the charts. And MACD has four major components. Let us look at all the four major components first, and then let us see how we can use MACD to improvise our trading strategy. The first one is the MACD line. It is the blue line that you can see on this MACD. Now it is formed by deducting a 12 period EMA from the 26 period EMA. The red line is called the MACD signal line. This is a 9 period EMA. The third one is the MACD histogram or the MACD histogram. Now, like you can see in the histogram length keeps increasing as the gap between the MACD line and the signal line increases. And the histogram line decreases in length as the gap between the MACD line and the signal line decreases. So you can either see the gap between both the lines, that is the MACD line and the signal line, or you can look at the length of the histogram to check the strength of the trend. Yes, so this way you will come to know what is the strength of the trend. And the fourth component of MACD is the zero line, which you can see in the center in between the histograms. Now, how do you take a buy or a sell call using MACD? Like you can see, when the blue line, that is the MACD line, crosses the signal line downwards, that is from top coming down, it is a sell indicator. And when the MACD line crosses the signal indicator from below going up, it is called the buy signal. Like you can see, there are three sell signals and you can see two buy signals. Now, whenever these signals come, you can take a buy or a sell call as per the charts. Now, here you can see that there is a chart. In this chart, there are three signals. Signal number one is a buy, signal number two is a sell, and signal number three is again a buy. The first buy signal is a good signal because the price went up after the signal was given. But the second signal was a sell signal, which was a bad signal because after the next candle, the price went up. And the third signal is again a buy signal where the price went up. That means it was a good signal. Out of three signals, two were good and one was bad. The one that was bad, we have put an X on it. Now, how can we remove this call? What can we do to make sure that such wrong decisions we do not take while trading? So what can you do? Very, very simple. You can use the 200 EMA and the 100 EMA crossover, or simply use 200 EMA. I have used my favorite signal, that is the dynamic support and resistance. We will first see it in a pic and then we will see it on the chart how it is done. So in this image, you can see that we have put the 200 and 100 dynamic support and resistance. So the first one is a good call because you see that the dynamic support and resistance is in green color. That means it's at a good support level, and you have got the MACD line crossing the signal line upwards. So you can go with a buy call. The second one is a bad signal because the dynamic support is still in the buy direction, whereas the MACD is giving a signal for sell. So you avoid that. And the third signal is another good signal because the dynamic support and resistance is still in green color. That means the trend is buy, and the MACD is giving you a signal to buy. So what happened? You have filtered out the bad trades and you have entered only into the good trades. By doing this, you are making sure that you are only entering into good trades. Now, even after doing this filtration, there will be times when you will hit stop loss. That is why I always say that it is only 60 to 70% win ratio. It can never be 100% win ratio. In fact, there is no strategy that will give you 100% win ratio. So this strategy will surely give you 60 to 70% win ratio and a minimum risk to reward of 1 is to 2. And as I said, it can go up to 1 is to 4, 1 is to 5, maybe 1 is to 10 because you're trading with the trend. Now let us go to trading view and see how it will look on the trading view. Now friends, like you can see, we are on the Nifty 50 index chart. It is a daily chart. Let us put both the indicators on the chart so that we can execute the strategy that we have discussed till now. So we first go to indicators, click on indicators, come to search, type MACD, that is MACD. Then you come down over here, it's written moving average convergence and divergence. You click on it and you close this. There you go. You can see the MACD line is already down here below. Okay, remember we have the MACD line, we have the signal line, we have the histogram, and the zero line in between the histograms. So all the four components of the MACD is visible over here. Now remember, in this chart, we are seeing multiple trades that have been given, but we are going to look at the trades that will be in the direction of the trend. So to take the direction of the trend, my favorite indicator is a dynamic support and resistance. Why? Because it clearly gives you a green and a pink signal. So that the green means the direction of the trend is towards bullish, and pink means the direction of the trend is bearish. So let us put the dynamic support and resistance onto the chart. Again, we go to the indicators, click on it. I have it on my favorite, dynamic support and resistance. I click on it and it is there on the chart, but it is not the way we want it. So we are going to make the minor adjustments. So we go to settings. We click on settings. The long-term EMA, we make it into 201. The DSR1 EMA length, we make to 200. And the DSR2 EMA length, we make it into 100. And our setting is ready. So we click on OK. There we go. So like you can see on the chart, there are multiple signals that has been given by the MACD. So let us analyze each of the signal. So the first signal is given over here. We will not take this signal because our dynamic support and resistance, that is the 200 and 100 EMA, is telling that the trend is bullish. So why should we take a bearish call? The second one over here is a bullish trade. It's a good trade, but I'm not taking it as an example. But still, if you were to take this as an example, if you would have entered after this engulfing candle over here. See this engulfing candle over here? The green one is engulfing both these red candles. So if you would take this over here and say example, we put a trade, a long position, you will still see that we will be achieving 1 is to 2 very, very easily. So it's 239 points for the stop loss, and the target has gone up to 776 points. So almost 1 is to 3 times. So you have achieved your target. But the better trade is when you take the call when it is in the dynamic support and resistance zone. So like you can see over here, okay? You take this call over here when MACD is giving you a buy. You enter this trade as soon as it clears the dynamic support and resistance zone. And you can see that this trade is giving you almost 1 is to 6 times. So you put your stop loss below the dynamic support. It's 495 points. Price is still continuing upward, but it has already traveled 3,214 points. So you can see that by using this combination of the 200 EMA or the dynamic support and resistance of 200 and 100 EMA, along with the MACD signal, you can really make very, very good successful trades. Now, friends, I hope how to use MACD along with 200 EMA or with dynamic support and resistance of 200 and 100 EMA will be very, very helpful to take the right trading decisions. This works very well in long term and it works in short term also. But remember, before you invest your hard earned money, practice at least 100 times. Practice, patience, and persistence is the most important thing if you really want to make money in the stock markets. Friends, I've written a book, Traders You Can Win, but First Learn to Lose. This book talks about coming out of bad trades as soon as possible and staying in the good trades as long as you can until the charts do not indicate you to come out. That's why it's Traders You Can Win, but First Learn to Lose. There are other things that I have discussed in this book, like other technical analyst tools, trader psychology, and trading strategies. If you're interested, it's available on Amazon in Kindle. And friends, if you really love the way I'm creating videos, please like and share these videos so that, like you, there might be many others who are interested in learning trading the right way, learning charting the right way. These videos will surely help them improve their level. Friends, I've created a lot of videos, and in future, I'll be creating a lot more videos. If you're still not subscribed to my channel, please subscribe to my channel and ring the bell icon so that every time I create a new video, you will be the first person to be notified. Before I sign out, I just want to tell that I've created a trading training set of videos. The link is given below. Kindly go through those videos and learn from it. It will surely help you become a better, consistent, profitable trader. All I can say is keep learning, keep growing. Thank you. Namaskar.